Hi guys, Victoria Husit here, and today let's talk about federal credit that you can receive if you buy qualified electric vehicle. I'm sure you guys all heard, Tesla now is a part of those qualified vehicles. However, what I discovered this year, there is a little bit of confusion what you can really receive and how the credit works. And today I want to explain, so there is no more confusion. And I will share my screen. I will use actually Tesla website because they did a great job what needs to happen in order for you to receive that credit. So let me share my screen. So I already pulled the Tesla website, and it doesn't matter what car you're gonna look. We just click on any of them and let's click on the details. Here you need to look, and we're not going to be looking at the price or what it comes up. I want you to look at the 7,500 federal credit and click on the details. And right here, this is a fantastic summary of what you can receive. So basically, you can receive up to 7,500 in federal tax credit if you qualify. So what are the qualifications? Your adjusted gross income. That's the first one. So married couple needs to make no more than $300,000. Well, actually not make as a W-2, but if you have dividends, if you have interest, if you have some K1s, businesses, whole year, after everything you put together, your adjusted gross income and you married cannot be more than 300,000. If you're head of household, your adjusted gross income cannot be more than 225,000. And if you are single or if you married filing separately, it cannot be more than $150,000. And then there is certain cars, like for example, for Tesla, it's only Model 3 qualified and Model Y qualified. Tesla has 2 more models, and those models will not qualify for the credit. So when you are looking into electric vehicle, go on their website, see what model it is. There is a bunch of manufacturers that make qualified cars. Just make sure that the car you're looking to purchase actually qualifies. So let's just say you pick the car that qualifies, the price of the car qualifies, your income is qualified. Can you really receive 7,500? And that's where interesting situation happens. You need to look into more information, because what the IRS website says, first of all, it has to be a new car. If you buy a used car, this used car no longer qualifies. So it has to be a new car. It cannot be a lease. It has to be purchased. And you can get a credit up to 7,500. It can be half of it. It can be the whole amount. So it depends on the capacity of, well, there is no really engine. So it's kilowatts. So go on a website, IRS website, and actually read what's requirements, technical requirements. But the main part that this 7,500, this is not a rebate on a car. Meaning that if your car, let's just say, costs $50,000, you're not paying just $42,500. You're gonna pay whole $50,000, and this $7,500 you can take off your taxes when you're filing a tax return. However, here is a catch. This is a credit that is non-refundable, meaning that your tax liability needs to be 7,500 or more in order to take this credit. Not your balance due or refund at the end of the year, but when you take your adjusted gross income, there is a tax being calculated that you have to pay. And then you deduct what you paid during a year, some other credits that you might be eligible, and you arrive into your balance due. So you need to look at your original tax from what you start. So if you, for example, owe your taxes only $3,000 because of your income, you didn't make that much of the money, so your tax is only $3,000, doesn't matter that the car qualifies for $7,500 in credit. All you can take is $3,000. And you cannot get a refund for $4,500. All you can get is only $3,000. If your tax liability is $7,000, this credit will wipe up your tax liability, but you are not getting a refund for $500. So that's where you kind of need to look at your previous tax year tax return, because you probably don't know what this year is happening, but kind of get an idea. So look at your last year tax return, find your tax liability line, and see what number was there. And this way you can kind of see if you get in this tax credit. Confusion happens, and that's what I heard from people, that they think that this $7,500 is actually a rebate on a car, meaning that they need to pay less, $7,500, or they just gonna get this as a refund on a tax return. This is not a correct statement. So do your homework, see if the car you're getting qualifies, see if you're getting actually up to the full amount and not only half of it based on technical specification of a car, and then look at your last year tax return and look at your tax liability and see if you had a tax liability more than $7,500, then this credit will offset your tax liability. So what it means that everything that you pay during a year plus refundable credits will result in a refund in the end of the year. I hope this was helpful. And in the next video, let's talk about solar panel credits.